You know what's crazy? One of the richest people in the world still lives in the same house he bought decades ago. No massive mansion, no private island lifestyle all over Instagram, just a simple house in Omaha, Nebraska. That man is Warren Buffett, and unlike most billionaires today, Buffett didn't become rich through tech startups, viral fame, or risky gambling in the stock market. He became a billionaire by following a strategy so simple that most people ignore it. Buy great businesses, hold them for a long time, stay patient, that's it. But the real story starts way before the billions. Warren Buffett was born in 1930 during the Great Depression, a time when families struggled just to survive. Money was tight everywhere, but even as a kid, Buffett was obsessed with understanding how money worked. At just 6 years old, he bought packs of Coca-Cola and sold each bottle separately for profit. Later, he delivered newspapers, sold chewing gum, and even bought pinball machines to earn passive income. Most kids spent money. Buffett thought about growing it, and that mindset changed his life forever. By the age of 11, he bought his first stock. At first, the stock price dropped, and Buffett got nervous. When it finally recovered, he quickly sold it for a small profit, but right after he sold it, the stock kept rising much higher. That moment taught him one of the biggest lessons of his life. Patience creates real wealth. Years later, Buffett met Benjamin Graham, the man who completely changed the way he invested. Graham taught him something simple but powerful. Don't treat stocks like lottery tickets. Treat them like businesses. That became Buffett's entire strategy. Instead of chasing hype, Buffett searched for companies with strong products, loyal customers, and long-term potential. He wanted businesses that would still exist years later, and most importantly, he only bought them when they were undervalued. Think about it like finding a luxury watch worth $10,000 selling for only $2,000. Buffett used that same logic in investing. He looked for value where others didn't. But the real secret behind Buffett's success wasn't just smart investing, it was compounding. Compounding is when your money earns money, and then those profits keep earning even more profits over time. At first, growth looks slow, almost boring, but over decades, it becomes massive. That's exactly what happened with Buffett. Even though he started investing young, most of his fortune came after the age of 50. While people chased fast money, Buffett focused on consistency. One of his most famous investments was Coca-Cola. In 1988, while many investors were scared, Buffett invested over $1 billion into the company. Why? Because he understood the business. Millions of people around the world drank Coca-Cola every single day. The brand was powerful, trusted, and unlikely to disappear. Buffett always believed in keeping investing simple. He once said, "Never invest in something you don't understand." And honestly, that advice alone could save people millions. Today, people constantly chase trends, meme stocks, and quick profits. Buffett did the opposite. He stayed calm while others became emotional. When markets crashed, he didn't panic. When everyone got greedy, he became careful. That emotional control made him different from most investors. Now, here's the funny part. Buffett's strategy sounds boring compared to flashy internet millionaires promising fast success, but boring worked really well because wealth usually grows slowly before it grows massively. And that's probably the biggest lesson from Warren Buffett's story. You don't need to be the smartest person in the room to become successful. You need patience. You need discipline. And you need the ability to think long-term while everyone else looks for shortcuts. Warren Buffett didn't become a billionaire overnight. He became one because he stayed consistent for decades. And honestly, that might be the most valuable money lesson ever.